Well, hello and welcome to another video by Financial Ernie. On today's video, we're going to be talking about Iris Energy, also called IREN. We're going to look at their latest quarterly earnings report. We're going to talk about their past, meaning this previous quarter. We're going to look at their current status, talking about some of the activities that have happened since this last earnings report, and then looking into their future. They did provide an investor presentation to go over some forward guidance, so we're going to talk about all that in this video. So all that said, let's get right into it. All right, and jumping into this earnings statement, you can find this on the SEC filing website. I will share a link in the description, but this is Exhibit 99.3. And for IREN, just to remind you before we jump into the numbers, if you take a look at their press releases, you would have seen that throughout the quarter, we're talking October, November, December, their hash rate started at 21 exahash per second, and it jumped up to 31 by the end of December. So when we're looking at this, keep that in mind when we're talking about the amount of Bitcoin revenue, and then also on the depreciation side of things. It will be the average depreciation throughout the quarter. So as more and more miners become available and online and that hash rate does grow, there will be a depreciation number that will also be growing. So again, just want to make sure that that is clear before we jump into the numbers. So starting out with the revenue line items, we're going to take a look here. And again, this is the December 31st ending period. So Bitcoin mining revenue came in at 113,483,000. And you can see that this is US dollars and it has the first three zeros taken off. So it does look like we're talking about 100,000, but we're actually talking about 100 million here. So again, jumping down to the second line item, this is their AI cloud service revenue. It came in at just 2,660,000. So that is a rather small amount of revenue considering the amount of capital spent in order to get this AI cloud service really up and running. Now, they will be able to continue leveraging relationships with additional customers, but I think it's going to be very, very critical that they're able to land those deals and to be able to get some solid revenue to be able to help out with a return on investment with that CapEx spent on the AI cloud services. And then the third item here for revenue is going to be other income. That's 3,444,000. We'll take a look at other income in a little bit so that you can understand exactly where this is coming from. But jumping down into expenses, we're going to start with depreciation. It was 36,198,000. And depreciation would cover things such as their miners, their actual facilities themselves, some of the equipment inside of those, some of that other infrastructure. So all of those different assets are going to have a specific amount of depreciation. This company is going to be taking out a certain amount based on the life. And they do have the depreciation of their miners anywhere from 2 to 4 years. And then they have their GPUs for that cloud service at 5 years. So they do talk about exactly the different ranges on depreciation and the life of these assets. The next item is going to be their electricity charges. Came in at 30,171,000. That is a very low amount of electricity charges for the amount of Bitcoin revenue that they did generate. That is definitely world-class in terms of the cost to mine Bitcoin from an energy standpoint at their specific facilities. And I think that's really important as to why they continue to expanding at their specific sites, because they have such a great power rate with this utility company that it makes sense to continue expanding and increasing at those locations. And then the next thing is going to be site expenses. Came in at 2,975,000. Renewable energy credits, the RECs, came in at 1,400,000. And then other operating expenses came in at 10,543,000. We'll take a look and see what all is included in other operating expenses as we continue. And next is going to be employee benefits expense. Came in at 6,985,000. One thing to note is because IREN does not have a large amount of various facilities throughout different cities and throughout different states, they're able to really manage their facilities with a lower headcount than some of the other miners. So that is a positive thing for IREN when you're taking a look at some of these other cost of operation line items. Moving down into share-based expenses, that's 7,975,000. And then looking at a reversal on impairment costs. So they took a little bit too much on impairments in the previous quarter, so they reversed just a little bit of that and given themselves $516,000 back in terms of positive income. So it's a reversal on an expense. And then professional fees came in at $3,533,000. Professional fees would be items you'd pay contractors. So whether it be legal expenses or whether it be various, maybe a real estate broker type of expense or just marketing expenses, anything that's not going to be for a direct employee team member, those are going to be more of the contractor style. That is what the professional fees are going to cover. And then other transaction costs, $1,452,000. And last is going to be this gain loss on disposal of property, plant, and equipment. So they did write off another $672,000 worth of various assets, whether it be different property, whether it be different miners, different equipment, things of that nature in this specific period. Jumping down a little bit further, I do want to highlight this specific item here, this unrealized gain loss on financial instruments. This is a $12,900,000 net gain. So this actually, even though it's under expenses, this is actually going to help improve on that revenue line item. So when you do look at the overall consolidated operating net loss, you're going to actually, we'll get to that number a little bit later on. And just remember that this $12,900,000 is actually what pushed them into a positive quarter. Now, I know some people have talked about the fact that they don't need fair value of Bitcoin to increase in order for them to be able to have a profitable quarter, but you have to understand they're using fair value of their financial instruments, which we're going to find out it has to do with that capped call and the convertible bonds, convertible notes that they already have in place. So as their share price fluctuates, they are utilizing that as a way to show additional revenue on the books. Now, if there's dilution that occurs in this upcoming quarter and that share price it gets pulled down, that is going to be a negative impact on the financial instrument. So again, it may have worked out this specific quarter for them, but it's going to be very important if they continue reporting this as an expense line item, that this could actually be a negative impact in the future quarter for IREN. And then moving down into operating profit and loss, this is just going to be the total for the section above, but there's still some other line items. So as of right now, operating profit sitting at $31,099,000, but continue on, you can see some additional financing expenses. So the financing expense for the convertible note, as well as some of the other instruments here, came in at $6,253,000. And then interest income. This came in at $1,587,000. So they did make a little bit in terms of interest that helps compensate a little bit for some of these other losses on some of their financial situations. Foreign exchange loss. This was a pretty large number, came in at $4,559,000. So again, because they do have some foreign entities, it's not all based out of the US. There is some issues, there is some foreign exchange. I'm still scratching my head exactly on how this plays a factor. We're talking about a digital currency. We're talking about Bitcoin. We're talking about selling this. They could sell it in the US versus selling it abroad. I'm not sure exactly why there is a foreign exchange loss in place. The only thing I could think is this the actual financial charges for selling Bitcoin itself? So again, this is a rather large number, and these companies that are able to actually build the HODL, they don't have to get hit with these expenses within the quarter. And then also having that HODL, as some of these other Bitcoin miners do, that provides that digital asset to be able to be leveraged for better convertible bond pricing in terms of interest rates and other premiums. So again, just something to keep in mind when you're comparing these different miners, the ones that use the HODL approach versus the ones that sell their Bitcoin at that specific day pricing. All right, jumping down a little bit further, we're talking about income taxing and the expense. So it was an income tax expense they took for the quarter at $2,996,000. So far, that leaves them with a profit loss after the taxes and this other financial expense line item, still at $18,878,000. But there is still another line item. This is foreign currency translation, another $11,973,000. So if you look at the top one at $4,559,000 plus this $11,900, you're talking close, a little bit over $16 million is being expensed on foreign currency and foreign exchange types of losses. So Again, scratching my head exactly on what's all included. I think a little bit of clarity would be beneficial. We'll see if we get that a little bit further down when they start to define some of these expense line items as well as some of the income line items. But taking a look at that, that gives them a total comprehensive income / loss for the period at $6,905,000. This is the final line item. This is their profitability for the quarter, coming in at $6,900,000. And as I mentioned earlier on, I still have it highlighted here, this financial instrument, this unrealized gain of $12.9 million. This is what pushed them over the top. If it was not for this, they would have been sitting at a negative $5 million, almost negative $6 million. Actually, yeah, about $6 million loss. So again, although they're not using fair value of Bitcoin, they are using, if you think about it, their fair value of their financial instrument, this convertible bond. And we're going to take a look at that in closer detail as we continue. All right, jumping down into their assets and liabilities. Cash and cash equivalents, they have $427,273,000. And this is going to be cash on hand at the end of December. Again, as I mentioned at the beginning of the video, we're talking about this past tense quarter. We're going to look into the current quarter to see what types of spend items have already occurred, and then again into the future to see what they are preparing for. But back to this specific line item. Other receivables sitting at $26,459,000. Financial assets at fair value through profit or loss sitting at $28,300,000. So again, talking about that convertible note, this financial instrument, it is showing up as an asset line right now for IREN. And then the last one is prepayments and deposits. So how much have they already prepaid for some of the mining equipment or some of the AI hosting or AI type of equipment, this GPU chips, total $4,209,000. And rolling up all those, it comes out for current assets, coming in at $522,241,000. So they had $2,952,000 on assets held for sale. So I should say that those are specific assets that are no longer being used for operational intents and purposes, but they're in assets that they are preparing for sale, I should say. They have not sold, but it is held for sale. Moving down into some of their other assets, looking at their property, plant, and equipment. This is going to be all of the infrastructure there for their grid that they use for both the miners and for the AI system, as well as the Bitcoin miners themselves, sitting at $1,209,339,000. Jumping down past that, right of use assets coming in at $1.7 million. And then computer hardware prepayments. Again, prepaid for some of the GPUs, maybe some of the miners here, $36,068,000. And then some additional prepaid and deposits at $23,106,000. And finally, financial assets at fair value through profit or loss, another one of these line items at $56,017,000. So you saw it up during the current asset portion for the financial assets at fair value at $28,300,000. And then you saw here as a non-current asset, another financial asset at fair value coming in at $56,017,000. And we're going to talk a little bit more about that as they more clearly define exactly what these line items are. But total, rolling this down under total assets, you can see they are at $1,852,082,000 in total assets. So that is a rather large, a very nice amount of assets. Hopefully they're able to leverage some of this in terms of getting some better convertible bond pricing. We'll see exactly what type of interest rate they were paying on this convertible bond in case you're not aware of that as we continue on. But moving past assets, we're going to talk about their liabilities. They had a total of trade and other payables. So this is what they owe. Current liability is $144,564,000. Next is going to be accrued interest payable, almost $1 million in accrued interest, $999,000, and lease liabilities, $381,000. Income tax is $1,941,000. And again, the income tax is going to be rather high because you have to remember they're selling Bitcoin, so they have to make sure that they are paying the capital gains taxes, if you will, on their income statement or income taxes. And then going down to employee benefits, again, this is one of their liabilities. They owe $5,039,000 in employee benefits. And deferred revenue, $2,291,000. provisions coming in. They owe $17,816,000 in provisions, and then convertible notes. This is what they're going to owe the note holder, the one that they sold the notes to for cash. They have to pay back. From a liability standpoint, $318,214,000. And we'll see a little bit more of that convertible note structure, as that is part of the financial instruments that they have throughout the income, as well as through some of the asset sections of this statement so far. And then taking a look down at embedded derivatives, sitting at $67,800,000. So non-current liabilities is going to be the last section before we roll up all of the liabilities, and it's rather small. Let me breeze through this. We're talking $1.3 million for lease liabilities, $5.2 million in deferred tax liability. So again, as I mentioned, it did look kind of small at 1.9 income tax current liability, but they are deferring. They're pushing back some of that capital gains tax income or income tax for a later period. And then employee benefits, another $192,000 owed in benefits. So again, rolling up all of these liabilities, you're going to come in at $565,811,000. So compared to the total assets, this is a rather healthy balance sheet. Looking at asset versus liabilities, I cannot complain about that in terms of this specific Bitcoin mining company. Issued capital is $1,985,104,000. Foreign currency translation reserve, so this is actually going to come off, that's $45,116,000. And then the share-based payments reserve. So this is what they still owe from a share-based compensation standpoint, based off of some of their executive incentive plans. They have $62,339,000. And they have an accumulated losses so far that they have. Again, this is all based off of that equity standpoint. The cumulative losses at $716,056,000. And last is the total equity. So this is the shareholder equity, $1,286,271,000. So total liabilities and equity comes in at $1,852,082,000. Taking a look at the issued capital, this would be starting in July of 2024 and then ending in December of 2024. You can take a look at that. So it started issued capital at $1,764,289,000. And then there was a subtraction amount of some capital raise costs at $6,804,000. And then share issuance, as far as capital being raised, they were able to raise $221,767,000 by share issuance in order to be able to gain some additional cash for various operational expenses, as well as future asset acquisitions and things of that nature. So again, last thing would be share-based payments. Total amount of capital issued for the executives or other consultants, share-based compensation, share-based payments came in at $5,852,000. So looking at the July start versus December, this would be for that 6-month period. It came in 1.76 billion is now 1.985 billion. So again, a little bit over $200 million worth of issued capital in the form of shares. And then looking at total equity. So I was really just focused on this first column, but there's also the foreign currency, the share-based payment reserve, the cumulative losses, all of those things of that nature. So total equity, shareholder equity was 1 billion, total equity raised in forms of shares was 1,097,351,000 as of July 1st. And then by the end of December 31st, it was 1,286,271,000. So again, pretty close to $200 million of additional capital raised in the form of share issuance. So this would be what the company gained by some of the dilution that occurred in this period. All right, so I talked a little bit about that $12 million, about that fair value of the financial instrument. Let's take a look here. This is one of the notes that they mentioned. This has to do with they call it the hybrid financial instruments, or in parentheses, convertible notes and embedded derivatives. So the hybrid financial instruments are separated into the host liability and embedded derivative components based on the terms of the agreement. So on issuance, the liability of the component of the hybrid financial instrument is initially recognized at the fair value of a similar liability that does not have an equity conversion option. The embedded derivative component is initially recognized at fair value, and changes in the fair value are recorded in profit or loss. So again, this is the type of financial reporting that they're doing. They're actually taking their convertible notes just based on the share price, and then kind of rolling this back into a gain or loss. So really fair value of their financial instrument. So it's a rather interesting way of accounting that IREN is doing here, to kind of instead of just talking about it in terms of cash flow, they're pulling it back into the income statement, and on some of these line items into the assets or liability statement. So again, it's important to understand that this is just the accounting practice that IREN is using when it comes to these financial instruments. And then this last sentence here, any directly attributable transaction costs are allocated to the liability and embedded derivative components in proportion to their initial carrying amount. So as I mentioned, if some of these line items end up negative in a future quarter, it's going to impact that income statement in a negative way. And one other thing you definitely have to note is this going concern line. It says the group has determined there is material uncertainty that may cast significant doubt on the group's ability to continue as a going concern, but has concluded it is appropriate to prepare the consolidated financial statements on a going concern basis, which contemplates continuity of normal business activities, the realization of assets and settlement of liabilities in the ordinary course of business. The operating cash flows generated by the group are inherently linked to several key uncertainties and risks, including but not limited to volatility associated with the economics of Bitcoin mining and the ability of the group to execute its business plan. So again, anytime you see that going concern in there, definitely want to make sure you're reading this statement and just prepare yourself and understand that as an investor. Again, I'm not trying to give financial advice. I'm just trying to break down these different earnings statements, and this is really for educational purposes. The next section here, for the 6 months ended December 31st, 2024, the group incurred a loss after tax of $32,825,000. And then looking back 1 year prior, it was $10,527,000, and their net operating inflows of $49,864,000. And as of December 2024, the group has a net current liability of $33,852,000. So again, just looking at that, that's still what they're going to owe. But they do talk net assets as well. They have their net assets coming in at $1,286,271,000. We talked about that already when we looked at the asset and liability statement. But just wanted to kind of point that out. There is a rather large amount of loss from this tax, and that's going to be important to see how they're able to kind of mitigate that in these future quarters. And one more thing in this area I want to point out is it says included in the net current liabilities position of $33,852,000 as of December 31st, 24 are convertible notes and embedded derivative liabilities of $318,214,000 and $67,800,000 respectively. So again, it's a rather large amount between convertible notes and derivative liabilities. And then according to their specific financial practices, this IFRS 9 and IAS 1, these specific instruments are required to be classified as current liabilities due to the related conversion option that may be exercised by the note holders within 12 months of the reporting period date. So again, because the note holders potentially would have the option to exercise those specific shares, the rights to those shares within this 12-month period, the company is forced to have it as a current liability, not a future liability situation. So again, just part of their accounting practices. Make sure that you are aware of that, as depending on the price of IREN in the future, these specific note holders may have options to potentially cash out early. So really pay attention to the details behind the convertible note documentation. And one last thing, as I'm still reading through here, I have it highlighted here. Let me take it off so it's not so unpleasant to read. It says the continuing viability of the group and its ability to continue as a going concern and meet its debts and commitments as they fall due are therefore significantly dependent upon several factors. These factors have been considered in preparing a cash flow forecast over the next 12 months to consider the going concern of the group. Key assumptions. So again, forward looking, this is the different line items that they need to execute in order to be able to take care of the convertible note as well as some of these other derivative liabilities. So first is going to be a base case scenario, assuming recent Bitcoin mining economics, including Bitcoin prices and global hash rate. So again, if Bitcoin pricing continues on in a bull market and a bullish trend over the next few quarters, that's going to definitely benefit IREN as well as all the other Bitcoin miners. They're going to realize either instant gain revenue for the ones that are selling Bitcoin, or they're going to just increase the total value of that Bitcoin HODL, which again is a very lucrative asset that can be used as an instrument to be able to get more lucrative convertible bonds and notes. Number two, expansion of operations at the Childers site, Texas, with installed nameplate capacity of 350 megawatts as at 31st of December 2024, incrementally increasing to 650 by June 30th of 2025. So again, by the first half of 25, they want to go from 350 to 650, increasing 300 megawatts. And then by the end of December 2025, they want to be at 750 megawatts. So a total of 400 megawatts getting added to this Childers site there in Texas. And then number three is going to be 3 operational sites in British Columbia, Canada, with installed nameplate capacity of 160 megawatts, 80 megawatts in Mackenzie, and 50 megawatts Prince George. And then lastly is 30 megawatts in the Canal Flats. So again, all of those specific locations need to be energized and powered on. And then fourth is going to be 1,896 GPUs installed with projected revenue based on existing contracted prices and recent market pricing of AI cloud services provided to customers. So again, these new customer contracts for the GPU market that they are now getting into with the AI cloud service, it's going to be critical. They have to make sure that they are maintaining all the requirements on contract, because if they have any of their contracts voided, it could actually impair the amount of potential revenue for that quarter. And then fifth, securing additional financing as required to achieve the group's growth objectives. We're going to talk about how they already plan on securing some of that additional financing. Hint, hint, at the end of this, they do talk about the current quarter that we're in now, so January through March, basically January through the time of this filing, what they've already done. Some of that is going to be preparing themselves for that securing of additional financing, and we're going to talk about that. And then the last little section here, the key assumptions have been stress tested using a range of Bitcoin price and global hash rate. The group aims to maintain a degree of flexibility in both operating and capital expenditure, cash flow management where it practically makes sense, including ongoing internal cash flow monitoring and projection analysis performed to identify potential liquidity risks arising and to try to respond accordingly. So again, just want to read through some of that. That is just some of the potential going concerns for the company. They have to make sure that they are operating on full cylinders and that they maintain very good relations with their AI customers. And looking at the other income line, you can see here it's broken down into 3 categories. ERS revenue at 1.4 million, insurance income at 1.6 million, and we're going to talk exactly how they were able to get such a large amount of revenue from their insurance claim in just a moment. And then the last one is just called other income. So it's only $341,000 worth. I'm not too concerned with that as we continue on. All right, and they do a great job of explaining this other income, again, in a paragraph format. So again, ERS stands for Emergency Response Services. This program is part of the state of Texas. It is a demand response program designed to help Electric Reliability Council of Texas, ERCOT, mitigate rolling blackouts. So the group receives recurring capacity payments for agreeing to curtail energy consumption in response to abnormally high electricity demand or other grid emergencies. So again, if you recall, a few years ago in Texas, they did have some rolling blackouts due to some of the cold weather that they were not necessarily prepared for. And then there are other instances, if it's a very high temperature heat wave with a lot of electricity being used for air conditioning purposes, those types of scenarios where there's a lot of impact on the grid, that's when this specific ERCOT group kind of utilizes this emergency response services, and they tell these Bitcoin miners and these various other companies that are part of this agreement to go ahead and power down. They need that to make sure that they don't have any issues with brownouts on their grid. And then this other section I want to talk about as well, the insurance statement. It's mentioned right here. It says other income includes insurance income related to insurance recovery of theft of mining hardware in transit. So they actually talk a little bit more about that down further. But yes, they did have some of their mining equipment stolen during shipment, during transit, and they were able to put out an insurance claim and count that as part of the revenue for the specific quarter. So then moving into some of the other operating expenses, I'm not going to go through all of that, but this is that $10 million line item. So let's hit these items that are more than $1 million. So they're paying $4.6 million for insurance. They're paying $2.5 million for non-refundable sales tax, and then $1.3 million for non-refundable provisional sales tax. So two different forms of sales tax that they are paying out, and then insurance. That makes up a large chunk of this other operating expense line items. And then, as I mentioned, here's that line item about the theft. So loss on theft of PPE in transit. So in July of 2024, a shipment of mining hardware with a carrying value of $1,724,000 was stolen while in transit, or whilst in transit, to the group site at Childress. The hardware was written off during the period ending September 30th, 2024, but an associated insurance claim was approved by the insurer in October of 24. So this specific quarter we're talking about, they did get approval from the insurance group to go ahead and get a payout for that claim. So again, they subtracted the deductible amount, and the rest of that they were able to claim as revenue. So they're able to recoup what was written off in a previous quarter as a loss. And then here's their cash on hand, the cash in bank. So $427,273,000. We're going to see exactly how much of that has been spent so far in this current quarter as we continue on. But just remember that number, $427 million. Again, this is cash. Moving down a little bit further, other receivables. So again, this is part of the asset line as other receivables. Total amount comes in at $26 million. The largest amount is goods and services tax receivable. So $19,167,000 on goods and service tax receivable, and then a couple other receivables as well. That is that $3.3 million they got for the ERS. Again, this is an item that they continue almost kind of like a bonus, if you will, or kind of a guaranteed amount of money, but they have to maintain the requirements. So if, for instance, ERCOT comes over and says, we need the grid now, they have to shut down their mining operations or their even AI cloud service operations, or at least curtail it down to the extent that they are not putting a large dampener on the grid. All right, moving down into more of their current assets. And this is the section I definitely want to pay attention to. This is part of the financial asset at fair value. So again, this is part of that profit or loss that we're talking about. Their cap call transaction, they have it as a current asset value at $28,300,000. And then their prepaid forward contract. So again, part of what they paid originally as part of the secured note, they got $56,017,000 worth of prepaids on the financial instrument. Looking down a little bit further, you can see some opening fair value, some additions, some financial assets realized, and then closeout costs. Again, in order to seal the deal on this convertible note, convertible bond, they had to pay a little premium up front. And then finally, the transfer to prepayment, another $8,475,000. So some rather large amounts of money went into the closing or the transaction of this convertible note. All right, another section on prepayments. Let's break that down a little bit. Since that was $36 million worth, you can see here mining hardware took almost the entire amount here. So they've prepaid for their miners $36,057,000. And then the GPU side of the business, this high performance computing hardware, prepayments was only $11,000. So a rather small amount of prepayments on the GPU side of their business. And of course, this is a growing side of their business. They are just dipping their toes in to see exactly how profitable they can make it in this cloud AI industry. All right, the next section is going to be the assets held for sale. You can see here, they talk a little bit about the S19J Pros. You can see this as of September 30th, 2024, they had $10,696,000 worth of miners held for sale. And then throughout this past quarter, you can see here that the S19J Pros sold after being held for classification. They were able to sell $8,129,000 worth of these S19J Pro miners in this previous quarter. So they still have some remaining miners. You can see there was some impairment reversal. So they took a certain amount of impairment for the miners they pulled early. And then based off the ones they sold, they then reversed that impairment. So maybe they received a little bit more than they had planned on the fair value of those miners. Again, so they were able to reverse a little impairment. And then there's also, again, some foreign currency translation differences. So I'm finding a lot of these very interesting. I'm not sure if we're dealing with, the Canadian dollar versus the US dollar, that type of foreign currency translation. But regardless, you can see that at the end of December, still remaining held was $2,952,000. And taking a look at their mining hardware, let's take a look at all of the rest of this property, plant, and equipment. Mining hardware, of course, is going to be one of the largest high dollar amounts. Land at cost, $5.5 million for land, and their buildings, their infrastructure there, the Childers site, as well as some of the others, $386,089,000. And then they had some depreciation on their buildings. They're taking $19.9 million in depreciation. So leaving them total asset value of their building and land at $366,171,000. Jumping down a little bit further on plant and equipment at cost. So again, the non-mining type of plant equipment, $7.2 million, again with some depreciation subtracted, leaving them with $5.6 million left of assets on various plant and equipment. And then here's what I think is very interesting. So their total mining hardware. Again, at the end of December, they had 31 exahash. So for that 31 exahash, they have the mining hardware coming in at cost of $643,475,000. So it gives you a little bit of an idea, on average, what they pay per exahash in order to be able to operate at 31 exahash per second at the end of December. And then you can see they've taken some depreciation. So just looking at the miners alone, from a depreciation standpoint, it's $44,628,000. And then some accumulated impairment. So potentially changing the life of the miner, maybe going from 4 years down to 3 years, or maybe 3 to 2, depending on the age of these different miners, or I should say potentially if they were legacy with very low efficiency, they may have went ahead and taken an impairment potentially at 2 years. So again, looking at all of that, it leaves them total mining hardware from an asset standpoint at the end of the quarter at 591,913,000. Their HPC hardware, this is just 10% of their assets, coming in at 68,190,000. So remember, when we looked at the revenue generated on the quarter for the HPC side of their business, it was rather low. I believe it was under $5 million. They've spent $68,190,000 so far on this HPC hardware, and they've already depreciated $5,818,000. So I believe they've depreciated more than they've made this past quarter in revenue. So again, I have to look back on some previous earnings statements to get a better idea. You can see here, looking back on a 6-month standpoint, total amount that they had at the end of June at 33 million. So again, they've added from June to December across those 6 months. They've added basically 35 million or so in HPC hardware. But again, they've taken an additional depreciation amount of close to $4 million. So again, they are depreciating about what they're generating in revenue on these HPC hardware. So again, I think it's important as they continue on in this industry that they are able to strike some very lucrative deals with some higher profit margins on this HPC industry. And then they do have some development assets as well. Some of their either their R&D or potential just property development. What are they using to develop the land? So total assets is 177,639,000. So total property and plant and equipment comes in at 1,209,339,000. And again, this is their reconciliation statement. Again, this is for the 6 months starting July 1st through December 31st. Just gives you an idea about their current balance on mining hardware, as well as what they've added on hardware and HPC computing. You can see those there. So total US dollars, both on mining and HPC, came in at 570,678,000. So if you just want to get an idea about what the deltas are, this is a great slide or a great table to really take a look at. And the convertible notes and related financial instrument section. Let's read this section here. It says on December 6, 2024, the group issued $440 million in aggregate principal amount for a 3.25% convertible senior note. Maturity is in 2030. In connection with the offering, the group identified a single combined embedded derivative being the conversion option. So again, this is some of that premium that they're having to pay for this note. Redemption right, it has separately entered into a privately negotiated capped call transaction and prepaid forward share purchase contract with financial institution. The net proceeds of the sale of the 2030 notes were approximately, so this is what they received for those notes. They received net proceeds at $311,600,000. And this is after deducting the offering issuance costs, related to the notes, the cap call transaction cost, which was $44,352,000, and the prepaid forward contract cost for $73,717,000, as described below. So again, you can read a little bit more of the details behind the convertible notes, these convertible senior notes, as well as the embedded derivatives. And again, it's important to differentiate when you see the word senior. It means that they are going to take precedence in the event that there's any concerns of bankruptcy. Not saying that there are, but just to better understand and define the notes. Anytime you see senior, they are going to take priority over just standard note holders and then, of course, the common shareholder. Continuing on a little bit further down, you can see some more information about the convertible notes and financial instruments, kind of going over from July 1st through December 31st, just all the details that happened. So the initial recognition, as mentioned, is $327 million. And then part of that recognition was an embedded derivative, so another $113 million here. And you can see some of the costs. So you're going to have to reduce that dollar value amount by the capital raising costs. So the amount in order to transact this convertible note was $9.9 million. And then they also received a little bit in an interest expense, so 9.85% interest. So again, that is something that they are able to recoup as cash, and then subtracting from that would be the coupon interest payable. So they had to pay out $999,000 because of that per annum of 3.25%. So recall, this was less than a month of having this convertible note. They already paid about $1 million in on it. So just keep that in mind when we're talking about the convertible notes. And then you can see the embedded derivative side of things. That change in fair value of this embedded derivative was $45,200,000. So again, there's the two balances at the end. And you can read through some of the paragraph statements here to better describe some of these specific terms. And continuing down a little bit further, you're going to see the fair value measurement. This is important because this is where that $12,900,000 of fair value, this gain on the income statement, came into play. So you can see here, they have their level 1, level 2, level 3. You can see some of the cap call transactions, their prepays. We already talked about those. But as we continue down, you're going to see a little bit more about this level 3. And this is the section that I want to really show you where this number comes from. Again, just talking a little bit more, describing this specific note. The closing share price of the note is $9.82. So again, if the end of the quarter, the value of that share price has increased, then they're going to get a fair value. They're going to get a gain on this financial instrument. But in the event that it goes under $9.82, they're going to have to take that as a loss. So again, we're talking about dilution. We're talking about this additional amount of capital that's going to need to be raised. Unless they have some angel investors step in to kind of take the brunt of that dilution, that share price could potentially fall. As a lot of additional shares come into the market for IREN, that is going to dilute that value, that price per share. All right, and taking a look at the level 3 liabilities, this is that unrealized gain loss I was talking about during the income statement portion of this video. You can see here that this embedded derivative has a gain of $45,200,000. The cap call has a loss so far at $14,600,000, and the prepaid forward has a loss of $17,700. So if you summarize all these, the net for this unrealized gain loss comes out at $12,900,000. So that is that number that shows up on the income statement. So again, that specific unrealized gain loss is what pushed the company over to being positive for this specific earnings quarter. So I just want to point that out as you are receiving this information, and understand that this financial instrument did play a large factor in that positive EPS. And this section here, we're talking about issued capital. This is going to be the amount of shares being issued throughout that quarter. You're going to get the share value as well as the number of shares. So looking at the June start, so again, we're looking at a 6-month period here. You can see the total share count was at 186,367,686. And at the end of December, the end of this quarter for this specific earnings, the share price had increased to 213,504,987. And you can also look at the actual value, so the market cap, if you will, for IREN, both at June of 2024 and the December ending 2024. So market cap was sitting at around 1,985,104,000. So exactly how did the shares increase? You can take a good look here, starting July 1st, at that 186 million, as we talked about. You can see shares issued under an ATM. So this at the market offering, 25,407,471 shares were added. And then share-based payment, so vested shares. This would be the executive type share structure. This is 1,729,830 shares. So that is the increase of share count for the quarter for IREN. And when you're looking at the EPS, let's see exactly how that was calculated. What portion of the income statement was taken in order to get this specific EPS amount. And you can see here, this is the profit loss after income tax. So this does not include some of the other loss items that was on the income statement. Because if you do recall, the total consolidated income statement was around $6 million for the December ending. But when it comes to the EPS calculation, they're starting at the amount after income tax. So $18,878,000. And then looking at the weighted average of shares for basic as well as diluted, you can see here, here's the 210 million and then the 221 million. So again, the share count was so close that the EPS didn't really change between basic and diluted, stayed at 9 cents per share. So again, that is an increase comparing to a year prior. They were at negative 7 cents EPS. So again, IREN is going in the right direction. Their operations that they have with this exahash growth, they are starting to generate good revenue. As I mentioned, they're able to leverage the large facilities and not need as much in terms of payroll and employee benefits as some of the other companies that may be a little bit more spread out. So again, these are some pros for IREN. And you can see that with this HPC business, as of right now, they are still trying to really kind of break even, if you will, considering the depreciation numbers for the HPC side of the business. But again, as they continue to gain additional customers and trust in this new market for them, they should be able to start getting some additional profit and some additional revenue in the HPC market. And looking at total commitments, how much money do they owe at the end of this specific quarter? You can see they've already paid for the mining hardware as of the end of December, so they don't owe anything additionally on that. But then they do have other commitments, so other amounts payable within a 12-month balance, another $105,751,000. So total commitments that's going to be due at the end of December, and this is looking 12 months forward, they have $106 million worth of cash commitments, so payment commitments. And looking at the share-based payments, you can see here some of the outstanding items as of July 1st going through the end of the period. You can see outstanding at the end of the period, share-based payments coming in at $7,888,554. And then also reconciliation of their RSUs. So again, this is going to be some of the employee vested plan here. Total amount outstanding at the end of the period, $8,851,405. And lastly, we talked about the current status. So what's been going on since the end of December, at the end of that quarterly filing, just looking ahead in the month of January, as well as the first little bit of February. So a couple things. First off is going to be the termination and the deregistration of the current ATM that they had. So on January 21st, the company deregistered their existing ATM. Supplement filed. This is the ATM that was filed on March 21st, 2024, which had remained active as of December 31st, 2024. So all of those shares that were added via ATM, they all came from this specific ATM register. So as of the date of the deregistration, 133,471,339 ordinary shares had been issued under this ATM. From that, they were able to get gross proceeds of almost $1 billion. So they were able to almost raise $1 billion with 133 million or so shares from an ATM standpoint. So moving forward, they did get approved one day prior to deregistering that existing ATM. They got approved on January 20th, 2024, on January 20th, 2025 by the board of directors. They approved a new registration statement, including an accompanying ATM prospectus supplement with a new sales agreement to the offer and sale of 1 billion additional ordinary share value. So $1 billion worth of shares. And that was filed on January 21st, 2025. And again, this is subsequent to the December 31st filing. So far, under this new ATM, they've already registered an additional 4,515,404 shares. So there has been dilution going on since December 31st of 2024. But from that dilution, they were able to raise an additional $51,941,000. So again, we're going to see what they're using some of that money for in the next couple of line items. So the S19J sale. So as you recall, there was still some additional items held for sale. And as of or in January 2025, the 6,300 remaining S19J Pro miners were sold. That total sale proceed had a carrying value of $1,502,000. And then they had a total amount left of 6,000 miners, which were still held for sale as of December 31st. So of the total 12,300 miners, they're able to sell about half of those, giving them an additional $1.5 million of cash. And then a couple other items. Exercises some bitmain options. So on January 2nd, 2025, group exercised their option to buy 48,030 bitmain S21 Pro miners. So a total of 11.2 exahash per second. So again, they were at 31 exahash per second. They exercised the right to purchase another 11.2. So if they were to energize all of this, that's going to get them to about 42.2 exahash per second. And an additional 30,000 bitmain S21 XPs for another 8.1. So again, they would get up to that 50 exahash per second. Again, the total amount for the purchase of all of these miners came in at $411,350,000. And they are planned for delivery between January 2025 and May 2025. So it does look like they will have enough miners on hand to get them to that 50 exahash per second by the first half of 2025. And recall, the amount of cash on hand, as I mentioned earlier on in this video, was just sitting around $400 and maybe $30 million. So again, they did have a couple other sale items for some small 1.85 million. I say small, but if you're comparing to this specific price, this was 411 million. So again, they've used most of their cash on hand for this miner purchase, but now they do have a clear path to 50 exahash per second. So at this point in time, again, I think it's important as these miners are delivered that they are able to energize them as quickly as possible because they've already paid cash for them. So they need to start generating revenue. And again, one last item, miner upgrade agreement. So on January 22nd, 2025, subsidiary of the group entered into agreements with Bitmain to upgrade part of their existing fleet of their 9,025 S21 XP miners. The 925 miners have a total hash of 2.4. Following the upgrades for this S21 XP miner, they're expected to be approximately 35,840,000. So again, that's going to give them a little bit more of an upgrade in terms of their existing fleet on top of the new fleet items. So again, this is definitely securing that 50 exahash per second by the first half of 2025. And then last line item really is just no other circumstances have arisen since December 31st, 2024 that significantly affected or may significantly affect the group's operations, results of operations, or the group's state of affairs. So again, this is just a quick little snapshot of other activities, and it's a pretty significant amount of activities. A lot of purchases took place just this past month for IREN to get them to that 50 exahash per second. And lastly, thanks for sticking around. Let's get into the forward guidance portion of this presentation. So again, this is part of the earnings call. They did release this as part of their earnings, and this is the Q2 2025 results presentation. Again, this was presented on February 12th along with the earnings. We're going to skip the actual earnings section as we went through that in significant detail, but let's take a look at some of the forward-looking items. So again, they did highlight their increased capacity. It went from 21 to 31. I mentioned that at the beginning of the video. They actually talked about the average operating hash rate at 22.6. So that gives you an idea for that specific quarter, the energy cost compared to the hash rate here. and just get an idea about the number of miners that were used on average for that quarter, because that's going to be part of that depreciation amount. And then they got their EBITDA, they got the impact. Growth outlook. This is where I want to spend a little extra time. So this is more of the forward-looking item. So again, a new 75 megawatt liquid cooled data center at the Childress for their AI and the HPC. They call this their Horizon 1. They're also developing that 600 megawatts at the Sweetwater 2 site. This was a newer item, and this would allow them to get a total 2 gigawatts of a Sweetwater data center hub. And then in order to basically make good on this growth outlook, they were able to secure 2.3 gigawatts or 2,310 megawatts of grid connected power. And their 50 excess per second expansion is on track, as was mentioned when we looked at the current activities. And as far as corporate funding, here's just a couple items here. I'm not going to go through these details. They just talked about how they have convertible notes and ATMs available. And then it does say continued evaluation of additional funding structure. So they're going to look for other options, but again, these options are on the table. Talks a little bit more about that liquid-cooled Childress data centers. Kind of neat to see it on the site map compared to the rest of their operations. And as I mentioned, when I'm talking about their employees, if you look at the magnitude of this site, again, they're able to do a great job of managing all of this equipment, all this hardware here, all in one location. So again, you don't need to spread out as much managers or direct team members to be able to handle this type of operations. Talking a little bit more about the Horizon 1 opportunity. So again, this is kind of looking a little bit further down into 2025. You can see that they mentioned the grid connection, getting that 2+ gigawatts connected. They talked about the liquid cooling aspect, and this is for the GPUs, their AI, and the HPC side of their business. And then also, part of the AI and the HPC is ensuring you have power redundancy. So again, as we talked about with the ERCOT deal, they have to agree to curtail their powers. But if that was to occur, how do they make sure they keep their data centers online? And that's where this power redundancy is going to come into play. So I could see some additional CapEx spend in order to ensure that they maintain the power redundancy aspect. I may be wrong. Maybe part of the HPC spend items, this AI spend items already included the power redundancy, but just kind of wanted to point that out a little bit. So kind of summarizing all that for this Horizon 1 opportunity, it's about 510 megawatts and plan to expand up to 910 in 2025. And the next line item, this is that Sweetwater 2 site. It's a total of 600 megawatts. So it's part of this 2 gigawatt hub that we're talking about. And again, you can see on the site map comparing Sweetwater 1 with Sweetwater 2. They're only 28 miles apart. So again, you can put a good amount of infrastructure and power connections to energize both of these facilities. And again, because they're so close to each other, it's rather easy to manage this from a G&A and a payroll and employee benefits standpoint. When you're looking at a rather large plant manager, potentially you could have the same plant manager for both locations if you want. So you can reduce some of that overhead spend in terms of your G&A, your payroll for those types of salary employees. Again, another little note to talk about. Let's read through some of this stuff. So for the 600 megawatt for the Sweetwater 2 site, as I mentioned, this 600 megawatt grid connection, this is connecting the 28 miles between the two sites. The energization is expected to be completed in 2028. So this second site will not start to generate any revenue until 2028. So it is a rather few years down the road. So again, if you're banking on this additional energy, this additional infrastructure in the short term, you need to think again, this is going to be a little bit further out. So I think it's important that strategically they look at some more of these convertible bonds with a maturity date past 2030 to ensure that they're able to start getting some return on investment once they get this site powered up and running in 2028. They go through a couple of the other line items as well. I guess there's one town That's fairly close by, about 39 miles. So if you're looking at it in terms of residents, you have all these employees working at these two sites. This is most likely going to be the location of residence for a lot of these workers. And then Sweetwater 1, the rest of the energization for that is on track for April of 2026. So again, that additional capacity increase will not hit in fiscal year or in calendar year 2025. Rather, it's going to hit in April of 2026. And they talk a little bit about some of the additional activities there to increase there at that Sweetwater 1 site. And let's look a little bit at their Bitcoin mining side of the business. They give a little bit of updates here. They show total at 31 exahash. They mentioned the plan to hit 50 by first half. And then look at this low cost production. I definitely want to take a little bit of time here. Their fleet efficiency sitting at 15 joules per terahash. That is by far the best disclosed fleet efficiency of the Bitcoin mining companies, at least the ones I've been covering, the rather larger scale companies. So again, great job by IREN in terms of this low cost production. And again, they mention here 3 cents per kilowatt for this childless power price. So again, amazingly low energy rates with very high fleet efficiency does reduce the amount of energy consumption for that mining of Bitcoin. And then they mentioned their profit margin. So again, we're not talking about depreciation, just energy costs compared to revenue. They're claiming 75% hardware profit margin at $100,000 per Bitcoin. So again, I think it's important that you do keep that depreciation line item in play, because at the end of the term, at the end of the life of these miners, whether it be 4 years, 3 years, or 2 years, you're going to have to replace them. So earmarking away that money, I think, is important. So depreciation should definitely be something, in my opinion, that you do put on the front end of the business, and you make sure that you're broadcasting that. But you don't have to. Not all the miners are comparable apples to apples when you're looking at all of these. If you just want to look at it from an energy, power cost, and consumption standpoint, yes, they're at 75% profitability. And let's break down that a little bit further. They do this right here. So again, part of this completing the childers, that gets them to that 52 exahash per second, so a little bit more than 50. And they have the mining revenue, again, for the year in 2025 at 52 exahash per second. Their revenue items would be at $1,036 million. Current state with this 31 exahash per second, it's at 642 million. So again, these are hypotheticals. If the company was to get to 52 exahash per second for the year, they could potentially have a mining revenue at $1,036 million. They do talk about the electricity costs as well, and some of the overhead costs. You can see the overhead cost doesn't really jump up as much when you look at the hash rate increase. And again, as I keep mentioning, it's because they're able to do so much at those large sites. They don't need as much overhead. And then renewable energy certificates. They do have a little bit here going from 9 to 17. So again, this is just another one of the all-in costs in order to be able to mine this Bitcoin. So that is how the adjusted EBITDA is getting put into play. And then look at that depreciation. That's not part of the 75% profitability amount. But if you did want to look at that and consider that, check out that adjusted EBIT. So that is more of the profitability, if you will, of these miners at 31 exahash and at 52 exahash. So 219 million at 31 and 355 million at 52. And then on the right, you're going to see their single site expansion. So again, they're going to phase this in as they add more and more of the miners and energize more and more of these different blocks. So again, great schematic, great photo to kind of show their forward progress and this forward guidance. And another slide I think is worth talking about is going to be this escalating power shortage. So again, they're basically claiming that with all these other data centers coming online, Oracle, Meta, Google, Microsoft, Amazon, it is going to be a rather intensive power consumption industry. So just looking at that forecast, looking at how much they are planning on increasing that power consumption between 2024 and 2025. It is going to be a large amount. And in order for them to reach this amount, we're talking about billions of dollars here. This is the amount of capex that it's going to cost these larger companies in order to be able to scale up for the data centers that they need. So looking at available US grid capacity, again, this is in gigawatts. It's sitting at somewhere around 15 gigawatts. How much additional electricity is currently under construction? That gets us a little over 20 gigawatts. But what IREN is showing is that there is a significant amount of potential shortfall. So if all of these data centers continue scaling up and they keep consuming more and more power, there's not going to be enough energy to be able to power all these data centers. And that's why having these dedicated sites like IREN has is going to be very critical for these customers. All right, and jumping down a little bit further, just talks a little bit more about their 5-year growth strategy plans. Some great summaries here, and then getting down into here. Nice to show some of their strategies site by site. You can see this Canadian site here, British Columbia, and then these other Texas sites as well. So the Childers, that's the one that's currently energized and Bitcoin mining. And then they have their Sweetwater, which is going to be their data center hub, their HPC and the AI side of their business. So again, they're looking to rapidly grow that business, and that's going to help with some of these larger customers. They're hoping to be able to talk into signing and inking some deals in terms of good revenue generating from the HPC AI side. Not going to go over the adjusted EBITDA again. It's listed right here. And then their consolidated statement. We went over that in some detail as we reviewed the earnings. There's their balance sheet, their assets and liabilities. Again, we cover that. And just some additional info on their profit loss. You can see here they're claiming profit loss at 18.9 million. Again, there's some additional consolidation. It actually dropped down to about 6 million on the earnings statement that they shared. But recall, part of that is that 12.9 unrealized gain loss on those financial instruments. So moving down a little bit further, you can get an idea about their net electricity costs. They don't really break it down of power consumption per Bitcoin. I think that would be a rather interesting metric to be able to see from this company, but they do provide an overall electricity charges for the quarter. And then just a couple assumptions and notes. I'm not going to read through that in the fine print. All right, thanks for sticking around to the end of the video. We did a great job covering IREN's quarterly earnings. We went over their previous quarter, we went over their current activities, and then we took a look at their investor presentation to talk a little bit about that forward guidance as they continuing investing heavily on the CapEx side of the business for that HPC AI data center hub business. So if you like this video, consider giving it a like, subscribe to the channel if you haven't already, drop a comment. What do you think about IREN's earnings report? Are you bullish on IREN as an investor? I think they definitely have a lot of pros. There are some items that I somewhat question just from an uncertainty standpoint on how they do some of the profits and gains and losses on some of those financial instruments. But overall, I think they have a really good, strong path to 50 exahash per second. The data center side of the business is going to be interesting to see how that unfolds. So with all that said, I hope you enjoy this video, and we'll see you on the next one.